Honestly, guys, I don't understand what's going on. We've been going sort of back and forth with regards to the war between US and Iran. And the trade that we had where we entered right here just hit stop loss, whereby we trailed one into profit and the other one was supposed to execute at the very top as prices are moving aggressively, but we did get a stop out on that. And here's how the portfolio performed. So we did get about negative $900 in total loss for this, which I believe wasn't was a bit reckless on my side, but that shouldn't really hurt us as much because the goal of trading is not just to make that one trade and then get done with the market. We are mostly trading for long term, and we're planning on we are trying to grow an account which can at least maybe reach at least maybe about 6 to 7 figures maybe in the future. Of course, we don't know where that is, if we're going to make it there, but
komanso ngati ili pulogalamu yanu kuti zidzachitika choncho ambuye ine ndine ndani kuti ndisokoneze pulogalamu yanu.
yeah. So of course it's not always like an optimism. We can actually get there, so we just have to be able to take in such type of trades because no matter how professional a trader thinks they are, there will always be some losing trades. And remember, if you've seen my previous videos, I always say it clearly that my win rate is 38% as of current. So it's 38 to 45%, which means that I win at least 38% of the times and 38 to 45% of the time. So this is not so great for most traders, as you would say, but then to me it is actually very good. This is actually a very good win rate. I'd have been more cautious or more worried about myself if I was below 30. But one of the things that we actually look for when we're trading such type of accounts is to make sure that the trades that you take actually cover up for all the losses that you make within that trading account. So if you can see, I lose at least about 45% of the times, or rather in this case, I'm only winning about 38% of the times, which means that for me to cover up everything, I have to win more than at least maybe a 1 to 2 risk to reward ratio for me to be able to cover for all the losses that I've been making on this account. But of course, remember, the risk to reward ratios don't really have like a lot of strength, but it actually has a weakness because it only counts the individual trades. Even if you lost like $1, it still counts it as a loss, even though on the next trade you won about, let's say, 1,000 US dollars. So that's a very big weakness. So but still, we are still doing pretty great so far. The portfolio is down at least about a point, 1.3%. So we're down about 1.3% overall on the portfolio, and I believe that sets me about $800. Yeah, close to $800, which is the value that we're down from the initial capital that we injected within the trading account. All right, so now let's talk about what we're going to, like, our overview. What are the things that have changed and how we're doing in the market? So currently, of course, I do not have any trades in the market. I closed all the trades for gold and closed my oil trade for a solid break even. And if you can see, the reason why we closed it is because we knew that if oil is going down, then the possibility for oil, if gold is going down, taking me out for stop loss, then oil has a very huge chance for going up. And actually that's what we've done. And we could have taken, of course we couldn't have hit stop loss at this particular point, but the stop loss was set really high above around this area. So that's just something that we were looking into, and we're just seeing overall how the markets develop with regards to the war, as well as in a few hours, I believe the Horizon British Intelligence Dashboard is telling us that there's the federal funds rate, which is coming out in about an hour and a half. So we're not actually going to have a trade open on this because the market, of course, is expecting at least about so that's the previous was 3.75%. The current is, I mean, the forecast is 3.75%, which and I think I saw a statistic that 70% of traders are expecting that there's going to be, the rates are going to remain unchanged, whereas 30% are suspecting that there's going to be a rate hike. So what's the possible scenario in terms of what will happen to the market if a rate hike has occurred? So what will potentially happen is that if a rate hike happens, then the dollar index has the possibility of going up in value. The reason why is because the bonds on the US market, which is which we can see by using the US government bond 10-year yield, has a very high potential, is going to go up. So bonds are going to go up in value. And the reason why that will happen is because now they will be adhering to the new rates. So the US 10-year bonds are going to have to appreciate in value because the federal funds rate has actually gone up. So if you've done a bit of like some valuations for government securities or interest yielding securities, then you know what I'm talking about in this case. All right, so in that case, what are we looking at? The DXY then has a potential to go up in its value overall. The reason why is because of the demand for government securities, US government securities. If that happens, then at the same moment, we should see that assets such as gold and silver actually start going down. And matter of fact, that's one of the things that gold is actually positioning itself for. You can see that the market right now is probably, we put in a higher low right there, which means that at this particular point in time, we're actually consolidating. So rather than moving up and down or being bullish or bearish, we're actually consolidating at this particular price. The reason why is because we put in a lower low around here. We put in a lower low around there, and then we're putting, a higher low at this price, and then we're putting in a lower high at this price. So you can already tell that we've started moving sideways. So at this particular price, I could say that traders are mostly pricing in and getting ready for a break lower, which would suggest that there's a possibility for the US dollar, the federal funds rate in the United States to actually get hiked. So we're just going to see how that plays out. But if the rate gets hiked, then this should be seen to go lower, and a good trade would be to short gold. And apart from that, we should expect US securities such as the SPX 500 as well as the Nasdaq to move lower as well. So the reason why is because the valuation of securities within the United States actually uses the discounted value of future cash flows in the calculation. So what happens if you know the mathematical formula for calculating government securities, more specifically the Nasdaq or stocks, you will find that there's the rate, which is the federal funds rate, which is used for the calculation. So if that goes up, it means this gets discounted more. So if it gets discounted more, then it will become a little bit more cheaper. So that's just that. The market would have to adhere to that. And then, yeah. So apart from that, that's just simply the overview of how the market is doing. And I guess in case of assets such as the Great British Pound, we should also see it moving down lower, because these sort of assets, pound and euro, they mostly depend on the value of the dollar. So if the value of the dollar is going down, or there's less the demand and supply for the dollar rather. So if the demand for the US dollar is high, then people are going to be moving their funds away from the Great British Pound and putting it, pumping it into the United States dollar. But if the demand is very low, then people are going to be moving away from the United States dollar, pumping it into GBP. And or rather, even if you just index this, whereby this is quoted with the US dollar, then what will happen is that if the DXY is decreasing in value, as we have said, or in this case, if the DXY is going up in its value, then this what that would do is that it will make the Great British Pound lose its value and go down much lower. So that's just that for with regards to the overall market. And right now we're just neutral. We're not in any trades, and we're just going to let the market play out a bit. And we're going to see soon how we're going to find an entry and actually get a trade on there. All right. So that's that for this video. Thank you so much for watching, and I hope to see you in the next one. And I hope you got some value from this trade, from this video. All right. Thank you.